Hello, hello, hello. Welcome, everyone. I'm Peggy Beauregard, the CEO of the Nest Egg Builder, and we work with people who would like to learn more about money and investing so that you don't fall into any of the pitfalls that are out there and can be very successful. And part of that is education. And we invite people like our friend here, George Roberts, who's going to educate you a little bit about some of his multifamily investing that he does and a few other things. And as you know, I found a quote that I thought would be very good pertaining to George today. But first, I'd like to tell you a little bit about him because George is George. George is this just totally remarkable young man. So before devoting himself to commercial real estate full time, George Roberts III worked as an award-winning data scientist and bioscientist with over 800 citations in genomics, microbiology, physiology. Deciding he didn't look handsome in a lab coat, he turned his attention to the dashing world of entrepreneurship. George founded Roberts Capital Enterprises, which sponsored value add multifamily of 600 units, car washes, early stage companies, and triple net real estate, which we love. That's our best. George hosts The Foundry, which is a podcast where leaders are forged daily, a podcast devoted to the role of entrepreneurship, leadership, and mindset, play, and success in the commercial real estate space. Plus, he also hosts CRE Weekly on Wednesdays at noon Eastern Time. That'll be tomorrow.
Mhm.
George enjoys public speaking and is award-winning Toastmaster. He has 9 scientific research publications, which makes him really smart. When he's not attending one of his business entities in the Midwest, he can be found sailing Lake Erie with his wife and 2 sons or tuning up his Argentina tango. His latest book, Passionate Living Through Passive Investing, can be found on Amazon, where all great authors are sold. So today I have this little quote because you just authored another book. Um, Your intuition knows what to write, so get out of the way. And as I was reading your book, I thought, wow, this is really appropriate because I really just you got out of the way and just wrote about your passion of the family that you live with and your passive investing and how great it's been for everybody. So welcome,
All
welcome, welcome. Take it away.
right, thank you so much for that beautiful introduction, Peggy. And I love the quote that you brought to us today because, one of the things I've noticed as an author that great ideas don't just come to you fully formed, they develop. And when you write your ideas down, that's a great way to find out just how creative you are. So what I'm going to do is I'm going to share my screen and, like you said, 100%. What you really need to do is just sort of get out of the way and get the process started. So with that, ta-da. Oh, it seems like I'm always sharing the wrong screen. My apologies. Let me try this one more time. All right. So I'm sharing all my screens right now. Here,
Excellent.
ta-da. And we'll get right back to the beginning here. All right, so here's my book, Passionate Living Through Passive Investing. So my goal here is I want all of the awesome investors on the show to be as happy as this girl. And to do that, all you have to do is just grab your own copy. Now, this is a little bit about my life. Uh, the book is really the story of how I went from a total workaholic as a heavily cited bioscientist to published in 3 different fields to an apartment owner and passive investor in private markets who has the time to teach his son to parallel park in the middle of the day. That's him in the upper left. Look how excited he is. And practice archery or enjoy his culinary creations. He's really amazing. So those are his honchkis there, and he's not actually we're not Polish here. He just cooks the cuisine of the world. He's pretty amazing. Visit the jazz club with my wife in the middle of the week without worrying about the alarm clock ringing at 6 a.m. Or take my children camping or out to the gym in the middle of the day. And I really had an epiphany there when I was camping with my son. A lot of the dads, they would just, it happened during the week, so they just dropped their sons off, and they're not bad dads. They just have other places they have to be. And it really made me realize just how lucky I am. I'm able to actually go to camp with him and do all those amazing activities. They did archery, usually they climb rope walls and all that sort of stuff. Really great, manly stuff, a lot of fun. So I'm blessed. All right. Let me just see. Oh, yes. I wanted to talk about the dichotomy control because you see, we have a thinner audience today. I think you must be the early voters. But everybody else is out there getting all charged up about politics, all these things that we can't really control. And, you can say, hey, the system isn't fair and, it favors the rich or all that. Or you can just grab a hold of your own uh, power, take control of your own life, take the bull by the horns, as it were. And this is one of my favorites, Epictetus, the dichotomy of control. What can we really control? We can control our thoughts and our actions. So I do talk a lot about investing, and there's technique and there's technology, and there's a lot of technical to it. But really, at the end of the day, if you have the right mindset, it'll not only make you more successful, but it'll ensure that you enjoy the success that you have. And that, I think, is really what it's all about. I'd love to just launch into the material here. I organized it under three pillars. These are the sort of cardinal ideas of the book. And the first is to capitalize on hidden opportunities. And I say that it's hard to beat the pack if you run with the pack, right? So if you're out there investing in public markets, stocks and bonds, it's really hard to build that information asymmetry. But if you get out there and you educate yourself about private markets, you work with great people like Peggy, for example, at the Nest Egg Builders, you can learn that there's a whole world of investments that most people they can't take advantage of because they've never really even heard of it and they don't know how to tap into it, right? First, you have to know it exists, and then you also have to understand how to get in there, which for many of us is your self-directed IRA or maybe your solo 401k. Uh, I think in many ways I may be preaching to the choir, but I hope, if I even reach one person today that realizes, hey, wait a minute, you mean I don't just have to invest in stocks and bonds until I'm 65? I hope, I hope. So just by considering private markets, you're already ahead of the game. Now, a lot of people, when they first look into private markets, I feel that there's this tendency to sort of stay on the first square that you find. For example, I am in commercial real estate, okay? I love multifamily. Okay. A lot of gurus write a book and just say, like, oh, it's multifamily, multifamily, multifamily. But that's not the case. There are so many things that you can do in private equity. And these are just a few. Through syndications, you could get involved in hotels, office, construction, factories, retail, or self-storage. Peggy mentioned at the beginning of the show she loves triple net. I love it too. It's beautiful. When you have that tenant paying literally all of the expenses and you know exactly how much money is coming in, that's a beautiful thing. It's like a bond, only a lot better than most of the bonds that you would purchase. You also get some decent capital appreciation, we hope, which
That's
is
right.
not usually true of most bonds unless you buy them at a significant discount to their par value. But there are other things you can do. You can invest in private companies through angel investing, something that I actually do. Or you can invest in operating business and franchises, some of which can be uh, reasonably passive. You can hire a manager in many cases and just oversee the manager. I think about what Warren Buffett does. I mean, yeah, sure, he's famous for his stock investments, but Berkshire Hathaway is really a conglomerate, and he just invests in great businesses with great managers that he trusts, and then he just watches to make sure that they continue to do the great things they do. So it is possible to some degree, invest even in operating businesses and be passive. There's also venture capital, private lending, something that I just love. If you invest in your IRA, for example. Private lending is wonderful because then you don't have to deal with some of the UDFI, for example, unrelated debt financed income that you'll have if you're investing in syndications. There's also traditional private equity. And there's also some more exotic things. I wanted to include merchant cash advances here. Another thing you can invest in passively. Sometimes a business owner will use their future receivables as collateral for a loan. And you can get a very high rate of return on that. Of course, it's a little bit dangerous because the collateral is sort of yet to be collected, but it's beautiful. And then, of course, then there's always stocks and bonds, which great to remain liquid. Don't whatever you do, don't go nuts on one of these things. I have a friend who said, George, I didn't feel rich until I hit 5 million. I'm thinking, oh, well, why is that, friend? And he told me, well, he invested all of his money in early stage companies, and you've got a 7 to 10 year window there. So if you do that sort of thing, of course, he knew what he was doing. He had his own business, and his operating business brought in a lot of cash. But yeah, don't go too crazy into one thing. It's a lot better to diversify. Commercial real estate can bring you cash flow. Things like angel investing can bring you very high IRR. Keep some cash, some stocks and bonds. It's always good. All right. Well, anyway, here, this is a little rhyme that I put together. Make sure that you remember that cash flow is important. Anybody remember Burma Shave? It was years and years ago. You'd drive down the highway and they'd have 4 or 5 signs in a row. And as you'd pass through, it would remind you to, like, oh gosh, I can't recall any of them in full, but this is my sort of analogy here. For passionate living, cash flow is a must. Ignore this rule. Dreams turn to rust. So yeah, definitely stay liquid. So the second big idea in my book is to take immediate and massive action. So if you learn anything great today from this presentation, or I hope if you buy the book and leave me a review, of course, uh, if you don't apply that in a day or two or a week, the likelihood is you never will. It's just a human nature. It'd be great if had an infinite memory bank and we remember all the good ideas and pull them out at just the right time. But what really happens is you get new ideas every day, and if you don't take immediate action, you probably will never apply that idea unless you're lucky enough to hear it again. So definitely take immediate action and massive action. I have another slide on that in a moment. Yeah, here it is, the Warren Buffett approach. So if you write down, say, your top 20 goals, it's been said, circle your top 5 and then just cross out the rest. Put them completely out of your mind. Now, I put an asterisk here because in a TV interview, Warren Buffett was asked how he came up with this amazing idea, and he claims that he has nothing to do with it and that he lacks the discipline to write lists. LOL. He's got a great sense of humor. But this is really the way to do it. So when I say take massive action, this is why I'm saying it, because even when you do start to commit yourself to a new idea, if you don't take literally massive action to get there, life will get in the way. So whatever it is, whether it's your six-pack abs or learning to dance, yeah, getting the sailboat ready for 2025. I was talking to Peggy off air just before we started. How's the sailing going? No, not at all this year. I had to give it up for dance, but that's how it is. You put those top 5 goals, and these are really mainly my personal goals here. Okay, so I just want to give everybody an opportunity to join the community. And this is totally free. So if you want to scan that code, learn more about us and what we're doing and what the book is all about, I just left that scan code there for Facebook. And then finally, pillar number 3. This is the third cardinal idea of the book: continuous and qualitative improvement. A lot of people will read a self-improvement book and then they'll say, like, well, but it didn't change my life. And how can you expect it to? Any guru can tell you, hey, this is how I did it. This is what I did. But if you're not willing to continuously and qualitatively improve who you are, how are you going to reach those goals, right? Those goals don't just drop into your lap. So I say continuous because is there anyone among us who is so perfected that we can reach our next biggest goal without improvement? No. And I say qualitative improvement. Some people say just, get 1% better every day, and that's great. And there are things you can do that with like maybe run 1% faster each day. That sounds doable, right? But you're going to be Usain Bolt before you know it. It's not that easy. You got to go for the qualitative improvements. And I use that as an example in the book. If you want to run like Usain Bolt, you don't just try to run 1% faster each day. You might have to focus on strength training this week. And next week, maybe you focus on balance. For all that counter body motion that you've got to go through to pumping the arms as you push off so quickly, right? There's all these things that you have to do. I say go for qualitative improvement. Um, right, here we go. This is something I call my six-pack ab solution. Oops, actually, here I didn't finish the I didn't finish the animation, so ignore that for a moment. Uh, I didn't get there in one step. And it wasn't a smart goal, right? I don't know how much weight I was going to have to lose to get my six-pack abs or what exercises I would actually have to do. I've got bad hips. I can't just do literally every exercise in the book, like crunches kill me. So I radically altered my diet. Uh, I did everything that you're supposed to do, counting calories, exercising more, eating less, total failure. I took out the bread, intermittent fasting. I started eating boiled chicken. And then people said, you're too skinny, George. So I actually had to go and get a body scan to find out, where am I at? That's the STIKU. And I found out I had a long way to go. Hey, people were telling me I was too skinny at 25% body fat. I was hardly wasting away. So if you want to reach a super far off goal, smart goals are fine, but what I find really works is you're going to have to develop that goal over time. And what you're going to have to do is you're going to go in iterations. You're going to try many things that are going to fail. Keep pushing, you'll win. So yeah, cardio, I did many different things, but it wasn't until I started dancing every night. Now that was a win. I live in Michigan. It's cold 6 months out of the year. I I'm just going to end up sick half of the winter, which is what happens when I try and go out and jog in the winter. So yeah, and I tried all these different exercises. Some of them didn't agree with my hips, but hanging from the bar, the perfect hang, and the ab bench, that did it. So just look for that in your life. Don't just set a smart goal and say like, well, hey, I did everything. I ticked off all the boxes. No, you're going to have to develop, iterate. That's the way you really win. All right. Oh yeah, this is something I was going to share. We talk about a lot of books talk about like the Zen of investing, and I talk about the three. Let's see, what are these? The three poisons. These are the three poisons from Buddhism, and I thought we have a chapter on the Zen of passive investing. Let's actually learn about what each of these things are. So there's the let's see, there's the rooster of like sort of arrogance, and you've got the snake of hate and the pig of delusion. So there's an antidote for each of these. So if you've got to do you can't just be driven by aversion, for example, like I don't like numbers. Well, you have to get over that. You either have to work with somebody who's your underwriter, or you have to learn to like numbers. So for aversion, we have love, and then for ignorance, the pig. If as they say, pigs get fat, hogs get slaughtered. And you have to, I'm sorry, actually, that's, it's a little different. It's funny how the Eastern view of things is a little different. Actually, this is the rooster of greed. So, you have to overcome that. And then for the pig of ignorance, we have education. So always, always, always educate yourself. Anyway, I wrote a little sort of a sort of children's story in the story to talk about the importance of uh, qualitative improvement. And here I'm using my caterpillar. That's my analogy. So I don't think we really have time to go through that because I know that Peggy likes to keep it to 20 minutes so that we can ask questions. And I definitely want to do that. And yeah, I want to thank for everybody who helped to make me the number one new release in commercial real estate. So yeah, if you want to become an author, we talked about at the very beginning. Another favorite quote of mine about authorship: "It's as close as we can come to immortality." So you
Mm.
want your ideas, at least your ideas can live on. So you got to decide what the book is about. And this was a little bit of a pastiche: personal transformation, business productivity, memoir. It's sort of all of the above. And it's actually not my first try. If you go to my website, you can see I wrote a different book about active investing, and I realized that that idea was just not well enough developed yet. I had more passion for this idea, so I went back to the drawing board and I wrote a book about passionate living through passive investing, and I will release that second book later. So the idea is, don't be afraid of going back to the drawing board. Whatever you do in any field, whether it's investing or writing, this is my second effort and it's been very well received. Just keep at it. Don't be afraid to start over. And I think this would be a good place to cut it, Peggy.
Okay. Well, we don't have a lot of people on, so I don't know that we'll have a lot of questions, but I was
Well, we're going to
curious.
go deep. I think we can definitely go deep.
Yeah, we probably could learn more about how you're dealing with the children part. I did have you brought up something called a MCA, a merchant cash, something. What is
Advance.
that? Oh,
Yeah.
cash
So that
advance. Oh, that's all that is. So I could go get cash with my paycheck every Friday, right?
Well, it is a little bit like the paycheck advances, and sadly, it is a very high rate of interest for those that choose it. But if your business is sort of drowning, and if you don't have access to some other source of capital, pledging that your future receivables might be literally the only way you can keep the doors open. So I find it very fascinating, and I thought we were maybe at the bottom of the business cycle and going back up.
Mm.
I think I would definitely like to explore that. But now, when I mean, everybody says we've been on the verge of a recession for like how many years? I swear it's been at least 7 years. Every year, people are predicting, hey, this expansion's gone on too long. We're going to have a recession this year. But it will happen. All I know, I don't know when it'll happen, but I know that we're one day closer to it today than we were yesterday.
Isn't that why they raised the interest rates was to avoid a recession? Took it all the way up to 7?
Yeah, we're yeah, right. They were hoping they could break inflation and then maybe hopefully lower them in time to to prevent the recession. But how often does that happen? The last time it happened, I checked, was 1996. But that rate cycle, if I remember, was not very strong. I want to say from the top of my head that rates were only increased by about 1.5%. So this was a very severe rate hike cycle. If something in the economy hadn't already broken or isn't on the verge of breaking, because things sort of break before we find out about it, it's always downstream of the actual breakage that it's once it becomes inevitable and irreversible, it seems. That's when the recession starts. And then the rate lowering cycle, it never brings us back now, does it? At least not right away.
Well, it's Fed's job to make sure that doesn't happen, but they've yet to do that ever,
Exactly,
ever.
exactly. Yeah, and if you want to talk about NBER, that's who determines the onset and length of our recessions, the National Bureau of Economic Research. And if you believe their research, you'll see that recessions have become, fewer since the Fed. But depending on how you define recessions, there's also an alternative recession indicator that shows rather the opposite. But regardless of which set of data you believe, uh, the value of the dollar has declined precipitously
No
since the
kidding.
institution of the Fed.
No kidding.
Yeah,
You
I
could say,
know. Tell me
since
about it.
I grew up, I was when I was writing a little bit in our the book the other day, it's like, okay, we paid a nickel. I don't even remember if nickel was the first thing that I ever paid for a candy bar, but
Yeah,
a nickel, now that same nickel cost $1.50. What people
yeah,
don't
I'm telling you.
realize is it's that same nickel. That $1.50 is still that nickel. So the time value of money is so important and people just, we don't get it. And I didn't get it either. I didn't know. until you
Yeah,
learn about.
Peggy, I remember dime stores like Mass Skills, and now we got dollar stores, and who knows what's coming next.
We used to have five and dime stores
Yes, that's right.
long before we had a long before we had a dollar store. It was a five and dime. I think
Yep.
it even said exchange, but I don't remember. Woolworths.
Oh, yeah.
Woolworths. Yeah.
Walk
Like,
down memory lane.
yes, well, yes. Eugene.
Curious, do you self-publish?
Yes, I did self-publish. So there are certain challenges with self-publishing. The first is keeping on track. Uh, yeah, this is really on and off that I've been writing for at least 3 years, mainly off. But I came back to this project in a very intense way, maybe about a year ago. Uh, Self-publishing also brought other challenges into finding the right people to help complete the project. I had multiple beta readers and developmental editors that I worked with, and most of them were not that great. I went through a lot of them, but since it was Fiverr, it didn't cost me a lot. What cost me the most was formatting the book. It cost me 2 months. And when I finally found somebody to fix the final last minute error that I found just as we were launching, that was actually a godsend because now, after going through three formatters, I finally find out who I trust. So if you're interested in self-publishing, I'd be happy to share with you the people that worked because I've been through a lot on this journey.
On the
Mm.
passive investing side, apologize, I was multitasking and listening at the same time. Uh, so you were involved in multifamily. What other activities are you involved in
Well,
for passive?
actively, really just multifamily, but passively, I invest in traditional private equity. I invest in early stage companies, angel investing. Let's see what else that
Car
calls to
wash?
mind. Yeah, yeah, car wash. That's another private equity thing. That's a roll up.
Mhm.
I mean, if you look at Mr. Car Wash, at least when we started the project, I think Mr. Car Wash was at about 50 price earnings. And you can buy some of these local for maybe, 5 to 7. And if you get a regional, then you can sell that for 8 to 10. And then if we were able to take it to the point where we could sell to, I mean, obviously, if we were launching our own IPO, then maybe 50. But the idea is that if you can sell to somebody like Mr. Car Wash, if they can, I mean, that's very accretive to them. If they could buy at 10 or 20 or 30 and sell, or essentially inflate the value of their stock to 50 times those earnings, they made a good deal, and so did we.
Right. Is there anything you're looking at now?
In terms of investing, yeah, that'd be great. I'd love to do some networking out of this show. If anybody is doing opportunity zones, and I wanted to reach out to you because I know, Peggy, you have access to so many different things. I've got some great profits coming in this year, coming in from, let's see, from construction, coming in from many, many different ventures that I really need to look into some very tax advantage things like OZs.
Okay.
So there's a tech incubator here in Chicago that I go to there. Before the pandemic, I used to go there once a month. Uh, they do medical startups, tech startups, lots of different things. Sometimes they're looking for advisors. Sometimes they do Shark Tank kind of things, which is kind of neat. Um, I did invest in one. These guys were creating wearable technologies. The intent of the wearables were the target market for the wearables was people who wanted to become professional basketball players. The wearable
Nice.
would now I will be honest with you. I only invested in it because I said, boy, that would be perfect for golf because that's my sport. Um,
Right.
but they failed. But anyway, the place is called 1871.
Oh, yeah.
in the Chicagoland area. Lots of startups come out of there. So it might be an area I go there once a month because I'm a tech guy, so I love tech. Always looking for opportunities. Number one, to help on the advisor side, but number two, sometimes there are opportunities to invest as an angel.
Mhm.
Great, I love it. Yeah, I've got my own local group, and I talk about that in the book. That if you're going to do that, make sure you go and find your local group, your local syndicate, because you got to say no a lot, Eugene, as you know. And I don't want people sending me raw pitches where I've got to do, 20, 40, 50, 200 hours of due diligence. First of all, to weed out the ones I don't like and the ones that I do like, that's more like at least a couple hundred hours. I don't have time for that. But if I can go and work with my local group, and they've already said no, 39 or 40 times for every
Yeah.
one that they allow to present. They've winnowed down the field a lot better. So yeah, I love that. And I for a long time was going every month until Argentine Tango took over my life. But I need to scale that back. It's I got to go out and if I wasn't here today, I'd be at my one of my local meetups pushing this. I think I'll go there next month. And then, certainly very soon. Yeah, I have to get back to the angel investing. It's really exciting because, I mean, it is, well, we always have Shark Tank going on while we're doing this, and we all laugh. It's not really like Shark Tank. It's
It's
not. But what else are we going to put on TV? So yeah, we see those sharks on there all day long in the background. We don't know what they're saying because we got the volume off, but it's fun.
Yeah.
Well, there's always people out there trying to start a new business, so
Yes.
you,
Yeah, I
you
mean that I
got to
love
look at
that.
everything.
Yeah, I love that wearables thing. I mean, I've seen things like the dribble up basketball. That's not a wearable, but the ball itself is smart and will tell you if you're doing the exercise correctly. I think that's beautiful. I mean, that company may have gone down, but someday somebody will find out a way to smooth out that learning curve to do amazing things like this.
Austin.
Yeah, so I was listening about the different types of private lending and things like that. So some of these can be very predatory. How do you evaluate them? Like for example, the merchant cash advances. I have a family member that went in and they got a bad one, right? Where it was very predatory on their end. So when you're looking at these higher risk kinds of opportunities, how do you evaluate them? Like what's your criteria that you make them jump through so that you can kind of get a good idea of whether or not it's going to be, like a sketchier company or a more reputable, safer company.
Right. Well, similar to angel investing, this is one where I completely believe that you got to have to go out and find an operator, right? Go find somebody who's going to do the vetting for you because, first of all, there is a lot of work you're going to have to do. First of all, you have to understand financial statements, and that's one thing. But then, how accurate are the financial statements? And small businesses, the financial statements are either bad, wrong, or not up to date, usually all three. So there's a lot that you've got to go through, and you want to diversify. So does any one person have the time to go out and vet all of these? No, not unless that's what you do. So I'm a big fan of staying in your lane. So I will operate multifamily. Okay, on the active side, that's what you're going to see me do. So when I diversify, it's got to be passive. And so I have not actually invested in MCAs yet. And yes, I do believe they can be predatory. I think anything it can be predatory or it can be a godsend to the business that gets it. You've really got to. Everybody has to be savvy. That's why I like the idea of helping people, educating people. Having good laws and regulations can only go so far. We can all level up when it comes to finance, but there's only so much you can do. You can only level up so high. So don't try to be, I would say, active in multiple fields.
Any other question? Jay will know a lot about business. Jay, welcome. You
Yes,
you brought
welcome.
up franchise before. Do you buy franchises, or do you just look at what franchises are where they're expanding, or do you
So
really
I
have an
haven't done that
view?
yet, but I do know somebody who's done that. I read John Ostenson's book. I had him on my podcast, and that's I think a huge advantage in my life. People ask me, hey, your podcast, how do you monetize it? Is it really worth it? Well, it's brought me a lot of notoriety on the one hand, but more importantly, if I do want to go out and invest in an operating business, I know exactly who I'd call if I want to go into some more traditional private equity or, go more deeply into angel investing. I've got all these people and I've got the transcript of the show. I've got essentially after an hour of interviewing somebody. That's why reason I like shows like this, going on someone else's show. I get to know them as well. So yeah, I mean, I can't say I'm an expert in that, but I know some people have done very well.
Yeah.
I understand Shaquille O'Neal. I can't even keep up with all of his franchises. Uh, Gosh, the guy just seems like he must be buying a business a week.
Well, you can make good money as business. I mean, reading another book by Richard Branson. He owns 400 businesses. Can you imagine what it's like running 400 businesses? You have to have 400 really good managers, right? You got to have good managers.
Yes. You got to attract good people and you got to know how to keep them motivated. And that's a lot to oversee. That's some people have that. He's amazing.
He's amazing. Yeah, and he just opened Dyslexic University. Opened this week. He had it on LinkedIn today. So that's cool. Which it's really interesting. Just, a lot of people are dyslexia. I know I had a little bit, a couple of my brothers have it. Um, but and he has it, right? Richard Branson has it. But dyslexia as a university is a different way of looking at things. It's not like there's something wrong. It's like there's another way to look at things. There's all these things you can create. I mean, that's how I'm looking at his company, his university. I think it's great. I don't think you have to be dyslexic to go there. I
Right.
think that's the place that you really want to get educated, though.
Yeah, from somebody like Richard Branson, I think that sounds like a plan. I don't think I'm planning to go back to school anytime soon or ever. But if I did, somebody like Richard Branson would be that sort of person. It's something I cover a lot in my podcast. Entrepreneurship being the proving ground of great leaders. A lot of people, they became great leaders after they founded their company. They're that sort of person. They're the visionary leader. And maybe they didn't quite go up through the ranks as much as they might have in a corporation, but they are able to build a corporation. Henry Ford, I think he was 40 when he started tinkering on his own. He was already an engineer. Similar situation, Steve Jobs. He went from selling his hippie van to get the capital to get out the Apple One circuit boards to being the head of what's now largest corporation in the world, and so many people like that. Off the top of my head, probably name a few more, but it's just amazing when you get that fire of entrepreneurship, that sort of visionary leadership that you can develop from that. These are people that just color outside the lines. And when you talk
Mm.
about Dyslexia University and somebody like Richard Branson, who really went his own way from a very young age, and I think the world is thankful for that, for what he's done and all he's accomplished. I think there are a lot of people out there that may be suffering. I always think about Mr. Wonderful from Shark Tank and how he says that some of the great entrepreneurs of the world are bad employees. He talks about how his boss told him to get on his knees and scrape the gum off the ground. And I think he just quit that day. Well, maybe a bad employee, but a great entrepreneur. So yeah, if you're out there and you feel this, the fire of brilliance, or that you think you're a visionary leader, and maybe the world hasn't noticed you yet, entrepreneurship that may be your angle.
Yeah, I think it's great. Well, look at Tony Robbins and a lot of people. Oh, by the way, you're still sharing your screen, and I think
Oh,
that
yeah, I
some
think we
people
can
can't
stop
see.
that now.
Yeah, so we've got a lot of people that are investing in businesses, and I think Jay Miller has her family looks at a lot of businesses and invests in some of them, of course. So I don't know, Jay, do you get a lot of businesses crossing your desk? We were talking about that a little earlier, that you can't get through hundreds and hundreds of businesses. You've got to have a team that knows how to just bring you the right things. So
Yeah, well, in the Business Wealth Without Risk book that I just shared, I can't believe it's still 99 cents on Amazon, because every single diagram that he goes through, it makes it impossible to fail if you just follow the system. So you first have to know what you want to create in your own business long term. And like he said, Shaq just acquires businesses like, just like he collects them. And Branson has 400 companies, but Branson had a vision. Shaquille probably has one too, but we don't know what that is. I can't really relate to the people that just, they invest in a bunch of businesses because they have an affinity for these sort of businesses, and Roland has worksheets for that. And it works for him. I'm not one, I mean, he's great, and I want to follow everything he does, and he makes it so simple. But yet everything we acquire or want to get involved with or partner with, it's a supplement to our business. And Roland's thing is like, don't, I mean, he's kind of down on creating any kind of business from scratch, because you can acquire something that someone's aging out, or you can partner with an owner and make it a win-win, and like almost 100%, so many of them, it's been zero out of pocket. Now that doesn't mean the seller or the owner doesn't get paid. It just doesn't come from you, and he knows how to structure it so that they do much better than they did before they sold it, or having sold it, they are doing much better, excuse me.
that's
I love it.
right.
Well, I just bought that, and at 99 cents, that's a great deal. I love learning from other people's systems.
Well, who's
Those
that
are the cheapest
author?
lessons.
Jay Abraham and Roland Fraser
Oh,
wrote this.
Jay Abraham.
Yeah. And it's 500 pages, and I just got back from California, and I went through a third of it. And it's just like, wow. I mean, if you really take this to heart without hiring one of them for $250,000 a year, if you just or get your best person or your best partner to, make each other accountable to follow this system to the letter and know what you want. I mean, it's if you're not easily distracted, you really can't fail, as long as you know where you're going 10 years from now. And a lot of entrepreneurs just don't think that way.
You don't? I'm sorry, George, I don't mean to cut you off.
No, no worries. I was just going to say for 99 cents, 500 pages, what a deal. The lessons I learned from other people, those are the cheapest lessons of all. You can go out and learn from your own mistakes, and that's necessary. But if I can learn from someone else's mistakes for 99 cents, I call that a good deal.
Yeah.
Kidding. Yep. And
Yeah,
I
thanks for
met
that.
him years and years and years ago, way back when I was first coming into the business, and he was just so far above my head. I like not couldn't follow him. I didn't know enough. I didn't know enough. And then I look back at all the stuff he's done and some of the great movies he's made, and so many other things, opportunity, didn't know at the time, which is too bad. It's life. Yeah, so any other questions or comments? Ethan left us, so like that, we still have a couple of minutes, but we're happy to stop anytime unless somebody else has anything else.
Yeah. Hey, Peggy, this is David.
Hey,
How are
Dave,
you?
great. Thanks for
Yeah.
being here.
Yeah, I kind of came in late, just real quick. I know George had mentioned what he does, and that's fantastic. I'm very excited about that. What about AI or utilizing that, ChatGPT and so forth to help you with the book and so forth?
Well, I haven't done that because I feel like everyone else is doing that, and I want to make sure that I maintain my individuality, but I'm sure that that's the wave of the future. I mean, I have seen people use it in the right way to get ideas, to make sure you're not leaving anything obvious out.
Right.
And then, of course, obviously, if you're checking everything, but then the question is how uh, how unique are those words? And then you may find yourself a very famous person just found themselves in a lot of trouble. Somebody found six evidences of plagiarism in a very famous book, and one wonders, was it ghost written? Was it Chat GPT? We don't know,
Mm.
but that's the danger. So I think it's beautiful. I mean, my son, he'll do his physics homework with Chat GPT. He'll just ask the computer, how do you do it? And usually it's right. And often is broken down enough that it's like a silicon tutor. So it's good
Right.
stuff. But so far I have not made as much use of it as I might have.
Yeah, I was kind of thinking more of the proofreading and that kind of thing to save you some
Mhm.
time. I
Right.
thought if that's something you've done or nobody who has done
Well, in
that.
that case, yes, because I have used Grammarly. Grammarly's great. I think I paid $120 for a whole year, and it's beautiful. It catches every comma out of place, and sometimes suggests a rewrite that's decent, or at least will flag something for being awkward, and I can rewrite it. So I think AI is really it's sneaking into our lives in thousands of ways. Even if you think you're not using it, you probably are. I mean, I talk to my telephone, right? I don't write any messages. Somebody was making fun of me today about how I misspelled his name. Well, that's just what AI thought I was saying. Bryan.
Well, I do use some chat. I write my chapters up. Then I put it in AI to ask it, does this make sense? Because I hit people with a fire hose and it will give me some suggestions. So then I have to cut and paste it so I can look at, because I have the two screens. And then I go over it again. It takes me hours to get a chapter done because of that. It's giving me suggestions to explain something in a better way, possibly. So I have to look at all of it and then re-edit it. So I do use it because if I'm missing something, I'm not worried about spelling or grammar, but did I explain an idea so it's understandable for an eighth grader, for instance, or an 8-year-old? And it'll redo some of the sentences for me, but overall it mostly doesn't do a lot.
Yeah, and
So,
I think that's
but
a
I
perfect
still use.
example of. Oh, go ahead, please.
Yeah, no, but I go back through and I re-edit it because you just never know. I don't want them putting something in that I don't know anything about. It's my book. I'm writing the book. I just wanted some suggestions.
Right, perfect example. If you're using it for suggestions, that's an ideal way to do it. Another way to do it, I think, I have a lot of interviews, and one day
Mhm.
I would like to write a book about the entire gamut of private equity. And I cannot be an expert in literally every aspect of private equity. So I'm going to want to include some interviews and using it to transcribe the interviews, to summarize the interviews, find the main key points. That's really huge. So yeah, I think people that use it the right way get a lot of benefit from it. People who just, like, hey, give me the answer or write me a chapter on X. That's sad. These people are really they're cruising for a bruising. So
Mm.
yeah, great examples of how to use it right.
Yeah, what I did when I first was going to write the book is I wrote what the chapters were going to be about. And then I went on a company called Bomb Bomb and I recorded just a snippet about what the chapter was. Like, this is the heading of the chapter and what the chapter is going to be about. So I knew what I was going to write about, right? So I was coming up with content and my chapters. And then I took it and I put it into, it was a StreamYard, but it was something like that where it transcribed for me. Now I had the beginning of my chapter. So now I could just take that transcription and then from there I built the chapter. from that transcription. But I used the AI for that too. And it
Yeah, and
doesn't
I have sorry, go ahead.
it doesn't capitalize or put periods or commas or anything. So
Yeah. Yeah, still some things to work out, but yeah, people who talk, some people just do well speaking their book and then having the AI summarize it and clean it up. I think that's a brilliant way to use it, but for some reason I just feel a little more old-fashioned. I like to bang it out and write it all myself. But maybe someday I will get to the point where I trust it that I can just talk about a topic and then let the AI turn that into a book. And I know people that do that. They will just simply have an interview, two skilled people, one an expert in in that particular aspect of the field, somebody else who's more of a general expert in the field, and make a book in a week. It's amazing.
that's great. We should
Yeah,
get a bunch of book people on here and just have a book discussion about
yeah.
what we're doing today and what we see the future and all of that.
Heidi, I know. I can't wait to see your book come out. And as for me, I think one of my future books, and I'm already writing it right now, is going to be something like Publish It. And this entire adventure of becoming a self-published author, I know there's so many people that could be helped by this. Some people say that, the book is the new business card, and I've seen a lot of books that have been written as business cards, and there's a difference in quality, but I can skim through it and still get a lot of value. But in other words, I wouldn't take it too seriously. Don't think of your book as a business card. It should be much more than that. But I want to help people, the people who really have something to say, who have a business, who need to get out there and reach people and want to take themselves to the next level. It really does help to put you forward as an expert, but hopefully, something more of just than just banging it out and getting it out there. I want to help those people because I know that even though I must have read at least a dozen books about how to self-publish successfully, I still was figuring out most of it myself. There still are not enough self-publishing books yet.
Understood. Austin.
Yeah, I just wanted to comment on that because I've read through a good portion of George's book so far, and it's really cool what he's written. I just essentially what really stuck out to me during one part, he talks a little bit about his journey of how he got into passive investing, and that he kind of discourages against some of the common quotes of what people say today. For example, when I got into this kind of stuff and trying to figure out real estate, the advice I was given was jump in feet first, go all in, that kind of advice. And as I learned a little bit from George in his book, and it's more of a try to take the more steady course. Like, don't upset your current life to get into this, right? You
Mm,
keep doing what you're doing. You start, like, you go and you follow the steps he has, where you go and you find those hidden opportunities. You start there a little bit, right? You put a little bit there, little by little. And it's not a get rich quick scheme, but at the same time, it can build really, really fast if you do it the right way and you find good hidden markets. And his explanation of that, it was just real, and then not just his explanation, but his actual life experience with what happened to him. It was very eye-opening and revealing. So I think a lot of people will find it very useful.
Thank you, Austin.
that was great. It's true. Jump in feet first. Yeah, well, I don't know about that. I think you got
I think I jumped in feet
to
first in the evenings and weekends. That's what I did.
you
I was
got to
going
watch
full
it.
steam ahead in my free time, and that really helped me. So yeah, yeah, definitely you have to take massive action for anything. But yeah, I was pushed. I was pushed into the deep end of the pool. I would have been happy for another couple of years in my current job, six-figure plus. It was good. So yeah, hopefully, if you are building that runway, as I put it, and then you do face a layoff, then like me, you'll say, "Hey, I'm close enough. I'm just going to do it." Rather than if you get laid off and you hadn't taken any steps, then you'll have to do it after your next job. That's less fun.
Well, when they say if you want to invest in the stock market, make a like a pretend portfolio and just watch it. You could do that with real estate too. You could just look and see. if I put my 50,000 in, if I had 50,000 to put in and I put it in with this, how is it doing? And see if you could get the updates on it from somebody that has invested so you know how it's doing.
Yeah,
Right?
absolutely. Everybody I
Still the
invest
bad,
with,
still the bad
yeah.
apples out there, unfortunately.
Oh, they have not all been removed from the playing field, but they are being removed. That's the good thing about tough times, that we do find out who the fake gurus are. And as the field gets a little bit thinner, then those who are out there doing the right thing get a little bit more popular.
Yeah, plus they make better deals because there's less competition like that. So we are at the top of the hour. Thank you everyone for coming. We really enjoyed it. George Roberts the third, you're just amazing as ever. Thank you.
Still in the realm.
I'm sorry, what?
Oh, I tell everybody that I'm podcasting, but somebody still came in. Sorry. This is
Oh, okay.
my kids. Sorry.
Oh, that's all right. That's terrific. Okay, y'all. We'll see you next time, same station. And bye to the kids too. We're happy
All right,
they
yeah,
could join
beautiful. Thank you
anytime.
so much, Peggy. Catch you on the flip side next week.
Okay, bye.